So, Matt Chambers from The Australian, we're seeing continued difficulties for the higher cost producers of iron ore in Australia. Is there a chance that the market fundamentals here could justify further falls in the iron ore price?
Yeah, Eric, I think there is, and Goldman Sachs certainly thinks so. I mean, they've come out and they've cut their long-term price forecast to $60 a tonne US, and that's from $80, which I think was a downgrade a few months back. So Goldman's expect it to actually go lower and stay lower, for the foreseeable future. What Goldman is looking at, I think Chinese demand's been a little bit weaker in the start of the year, and the theme's the same. I mean, the big producers, BHP, Rio, are just packing this extra supply onto the market and flooding it. Now, what Goldman Sachs is saying is that the Chinese mines, which everyone expected to come out of the market, they were the higher cost producers. Goldman's saying that that's done now. All we have left in China is iron ore mines that are close to mills, steel mills, so they're not going to shut down, and ones that are owned by state-owned enterprises who'll stay open for other reasons, such as employment and political reasons. So no more's coming out of China. That means the cuts are going to have to come from other places, and the issue now is where that's going to be.
Cuts in production, you mean?
Yeah, sorry, cuts in production.
Right, so how low would the price have to fall before we'd have to start considering that there are things at play other than just supply and demand?
Well, I think the amount of actual supply that's coming onto the market is going to be the factor in that. And I mean, what the big producers, they can make a profit at $50 a tonne, and so if there's no demand to take up the extra supply that's come out, the price is going to fall until it hits a level where this is the theory. It hits a level where the surplus supply comes out of the market, the higher cost miners.
Right, so that's really bad news for somebody like a Fortescue or an Arium, because we're thinking that things can fall further.
Yeah, well, Arium have recently closed down one of their high cost mines. Fortescue estimated to have break-even costs, and this is the cost where they can cover all their interest and debt repayments, at about $60. So, in theory, they're okay for a little while, but it's the smaller guys that are going to have to ask the serious questions. You've got people like Atlas, Grange Resources, Mount Gibson, all probably above that $60 a tonne level, and so they're going to be looking seriously at how they keep their mines running, and that's something they've been doing for a while. I mean, you can't just automatically assume that they will have to close down, because part of the reason that the Goldman has reduced its price forecast, for example, is that costs are getting lower. The oil price is coming off, currencies, the Australian dollar is lower, that helps. So I think we're going to have a good look at how low these guys can get their prices before we start speculating that they'll be closing down.
Right, now we do see the occasional Indian summer in amongst the reporting here, as one day the price will go up, a few points. Is that really not, we're not expecting that to be a trend anytime soon? It's got to fall further before it bounces back up? I
mean, it might bounce. I mean, you can never, it's a spot market. The good thing about iron ore, when you're looking at it, it seems to mostly be supply and demand factors that move it, unlike oil, where you've got a lot of speculators in there. There's not too many in iron ore at the moment. So if China just surprises, if for some reason the mills start buying and restocking, that's going to see a little bounce in the price. But what we are going to see is steady supplies coming on. So you have to think any bounce in the price is not going to be very high, or it won't come back too much.
Right, now just finally on those higher cost producers that we are expecting to hit some difficulty potentially, is there any sign that there could be some shorting or anyone panicking and getting some further pain from the market rather than just the fundamentals? I
mean, yeah, sentiment's a big thing with the iron ore miners. Yeah, people will look at debt covenants and where they are, and whether there's that means that there's danger not just of not having profit but having to raise equity. That's some of the fear around Arium. I think they've got to keep their interest or their earnings at 3 to 3.5 times their interest, and they're sort of skating up against that. And if their earnings don't meet that, then their lenders have certain rights, and they may raise equity or have to raise equity to protect that. So those sort of fears are creeping in. Yep. Not too much around Fortescue. I don't think there's much of that there. Atlas Iron, there's been a few queries about the balance sheet and that they may have to do something there. So, yeah, I mean, those sort of factors are coming into it.
Plenty to keep our eye on. Matt Chambers,
Yeah.
thanks very much.
Thanks, Eric.